Welcome to our discussion on credit. Today, we're delving into what it means to use credit, a tool you're likely familiar with if you've ever used a credit card, taken out a loan, or financed a purchase. But let's break down what credit really is and how it operates. Essentially, credit is your ability to borrow money or obtain goods and services with a promise to pay back later. Using credit involves taking out loans or accessing lines of credit for purchases that you either can't afford immediately or choose to defer paying for. Now, let's explore the main types of credit available. 1. Revolving credit. This type allows you to borrow up to a certain limit and repay the borrowed amount over time. A common example of this is a credit card. 2. Installment credit. Used for specific, high-cost items like cars or houses, this type lets you borrow a set amount and repay it through fixed payments over an agreed-upon period. Gaining access to credit usually requires an application process. This process can vary based on the type of credit, but typically involves submitting details about your income, employment history, and credit score. Lenders assess these details to decide if they will approve your application and under what terms. If you find yourself with a poor credit history or score, securing credit can be tough, but there are ways to improve your chances. You might consider a secured credit card or loan, which involves providing collateral like a deposit or an asset. Another option is to have someone with a strong credit score, like a family member or friend, co-sign your application. So why is credit so important? It's crucial for achieving financial goals, whether you're aiming to buy a home, lease a car, or start a new business. Access to credit simplifies the process of securing the necessary funds. However, it's imperative to manage it responsibly. Paying your bills on time helps maintain a good credit standing and prevents damage to your credit score, which could hinder your ability to qualify for credit in the future. Furthermore, a good credit score can get you better interest rates and terms, saving you money over time. Remember, responsible usage and timely payments are key to enhancing your financial well-being and helping you achieve your financial goals.